Television. I'm joined from Singapore by Adam Gilmour, co-head of FX and derivative sales at Citi. Adam, thank you for joining us today. Some would say that this move was long overdue, this intervention, but it did catch many people off guard because a lot of people were not expecting it to come straight after Naoto Kan managed to hang on to the prime ministership.
Yeah, that's absolutely right. I think the market was thinking that if Khan came in, there'd be a lot less pressure to intervene. The market sold dollar yen on the back of that overnight. So very surprising that so quickly after getting back in, they've done some substantial intervention.
Do you think that it is a political move to show the backbone of Naoto Kan and his party?
I don't think so. I think it's something that they feel is necessary. I think the Japanese government has focused on the currency for as long as I've been in the business, well over 15 years. I think they're concerned about the excessive strength of the yen at the moment. All the major companies in Japan are concerned. And I think that, it's more than politically driven. I think it's driven for the economic good.
Now, how much do we know about the scale of the intervention so far and the details of it?
It's still unclear. I mean, I heard you talking before about, around $12 billion. I'm sceptical that that much was transacted. But, I wouldn't be surprised if it was at least $5 billion worth.
And if it follows a similar pattern to interventions in the past, this would only be the beginning of a longer policy of intervention. Do you think that's fair?
Yes, that's fair. I think very, very rarely do we ever see a one-off type of intervention. The BOJ has been, reasonably active in intervening in the last 15 years, and they normally will come in many times. I think it's strange that they put a line in the sand at 82. And obviously that means if it goes back down there, they're going to have to come back in again. So we'll see.
When you put a level like 82 in the sand, as you say, does that not beg the market to test that level?
It has in the past. In a lot of different currencies, when central banks have come in at a particular level, investor community likes to test their resolve. I remember when the Aussie was falling through 50 cents, the RBA was coming in very aggressively and all the hedge funds came in and took them on. But, in my experience, when they do draw a line in the sand, even if it breaks through that level, in the not too distant future, that will be near the bottom of the range.
Now, we have heard some analysts say today that this is a good buying opportunity. Others saying that there's just too much uncertainty yet. Where do you stand on this?
We're actually the other way. We think the dollar yen is somewhere near the bottom of the range it will be in. We think the market was too complacent to buy the yen. There's a lot of talk about all the exporters having to sell and the lack of demand from the onshore investors. But we think the market has become particularly long the yen on the short-term speculative side in the recent days and weeks, and we think their unwinding of those positions will keep the yen at least around these current levels.
Is there a concern that the intervention simply will not work, and if market forces dictate that people wish to buy the yen at a higher level, that they simply won't be able to keep going? They will run out of bullets, as it were.
Well, it's very hard to run out of bullets when you're buying the dollars and you're selling your own currency. I think the Japanese government will be pretty relentless in this. I'm not saying that we might not test lower. We could even test down to 80 or 78, but I think that'll be it. And I think, the next, 5 years' time when dollar yen's back at 110, everybody will be looking at these levels and saying, geez, I wish I'd have bought some.
Now, as far as exporters are concerned in Japan, we've seen the effect on the Nikkei today. Is 82 a level you think that they are going to be much more comfortable at?
I don't think they like 82. I think they want to see somewhere around 95 or even 100. I think that's a level that the market's talking about. A lot of break-even levels are for the exporters.
And I know this is asking you to look into your crystal ball a little bit, but when do you think that next intervention might be?
The next time it trades back down to about 83.
Okay, Adam Gilmour, thank you very much.
It could be tomorrow.
Okay, thank you very much indeed for that.